Round two, we need some sound effects here. In one corner, Dr. Marc Faber, the ultimate bear. In the other, Michael Yoshikami, who just as the bell rang a couple of seconds ago, came out of his corner swinging. And Michael, you were noticing or pointing out that Dr. Faber was saying, look, long term, you know, he's looking for Armageddon. Short term, he thinks you can still trade the market, and investors need to be aware of this investment time horizon.
Yeah, that's very, very important because if you look at many analyst perspectives who are negative on the United States, they said basically things were going to collapse in 2008, 2009. Then they said there's artificial money. Now it's going to be 2013. Now it's going to be 2020. And the question really for investors is, okay, maybe this calamity is out there. Maybe unsustainable debt is out there. We have entitlement programs. But what do you do in the meantime? So it's important when you listen to the headlines not just to hear doom and then immediately say, I need to go into my cave now, because if you do that, you're going to have no returns for all of those years. Wouldn't you agree?
You are absolutely right. That's why I told my readers and a media enterprise in the US on March 6, 2009, buy stocks. Because the worse it becomes economically and geopolitically, the more markets will go up because the more money they will print. So I'm not feeling guilty of having said don't touch anything. On the contrary, because I'm so bearish, what you shouldn't own is cash. Cash is going to be a disaster.
Okay, Dr. Faber, let's pin you down here to some actionable strategy. Apocalypse, perhaps
yes.
Not right now, but maybe in the foreseeable future if you take that worst-case scenario that you're painting. So what do? Do you hole it out in a log cabin with a sawed-off shotgun and your stash of gold? What exactly should you tell investors?
No, with a cannon, not a shotgun. And a tank in front of your garage. No, I mean, I'm telling you this. Of course, if the disaster strikes, it's very difficult to survive it if everybody else is killed financially, because the governments will, of course, take your gold away. But I'm just saying, whatever you do today, it may not last. The market, if you print money like in Zimbabwe, can go up very substantially, but the purchasing power of money goes down, and the standards of living go down, and eventually you have either civil war, and by the way, in the US, the mood has turned very, very negative among certain groups of society.
Mark, let me jump in there, though.
Yes.
You've got central banks raising rates. The Indian central bank
well,
knows...
Well, not in America. They don't raise rates
but
in America.
But they're talking about it. They're having a substantive discussion about it. Now, and the people are coming back. The people are packing themselves into Best Buy now. The government may be failing the people, but the people aren't failing the people.
And I was just in the United States.
You know why consumption is up? Because people don't pay their mortgages. So they have surplus cash. If you don't pay your mortgage, then suddenly you
austerity for 2 years.
If you're going to go bankrupt anyway, you might have spent as much as you can.
Yeah, but see, when you make the statement that people, that's not the case. Most people are paying their mortgages. Most people are working. Most things are okay. It's not carnage in the streets. It's not Zimbabwe.
But still, about 16% of the people in America don't have the jobs they would like to have or are unemployed.
Mark, Mike, hang on to this. Here, you can have that, and you can have that. Okay.